If you had $10,000 sitting in your bank account right now, what would be your very next move? That first $10,000 holds the power to truly change the course of your life. Use it wisely, and over time, the potential returns can be phenomenal. Ignore it, or let it sit dormant, and you could miss out on hundreds of thousands of dollars over your lifetime. Today, we're going to explore this crucial starting point. We'll cover 3 things. First, why your first major investment decision is so important for your financial future. Second, practical ideas on how you could grow that money safely and strategically. And third, the biggest mistakes new investors often make and how you can easily avoid them. Let's start with why this first $10,000 is such a big deal. Having $10,000 in your bank gives you confidence. It lets you make bigger decisions, walk away from toxic situations, leave jobs that don't fulfill you, and distance yourself from people or environments that don't serve your highest self. Once you hit that first savings milestone, you feel more optimistic about the future. You see your progress, and it becomes easier to stick to the good money habits that got you there. But here's the big question. Could that money be working even harder for you? For real financial security, it's wise to build an emergency fund. If it's just you, 3 months of living expenses is usually enough. If you have a family, consider 6 to 9 months, and keep extra cash for short-term goals, maybe a holiday or a house deposit. When I was saving for a property, I split my money. One account held an easily accessible emergency fund. Another held tens of thousands for the deposit. It felt comfortable knowing I was covered. But I also realized my money wasn't working nearly as hard as I was. And this is the problem in our financial education. We're told to save, save, save. But no one shows us how much better off we could be if we invested. Savings are lazy. They sit quietly in your bank account. They look safe, but they aren't really growing your financial future. Right now, many savings accounts offer just 4% interest, maybe a little more in some places, but usually there's a cap. Compare that to a diversified investment portfolio. A reasonable return might be 8% per year. Invest $10,000 at 8%. In 10 years, you'd have over $21,000. Keep it in a 4% savings account, and you'd have just under $15,000. The only difference: letting your money work for you. The longer you wait, the bigger that gap becomes. That is the quiet power of compounding. Investing also protects you from inflation. A 4% return might not sound bad, but inflation slowly erodes the real value of your savings. $10,000 spent on goods a decade ago would cost nearly $14,000 today. Investing helps your money keep up with rising costs, making it much easier to build genuine wealth over time. Even small investments, left to grow, can become huge over time. Invest $10,000 at 8%. After 1 year, $10,800. After 2 years, $11,664. After 3 years, just over $12,500. Each year, you earn returns on your original money, plus the growth from previous years. Those gains compound, snowballing into significant progress. By year 20, that initial $10,000 could grow to over $46,600. Without adding a single extra penny. This is the power of compound interest, and why starting early, even with small amounts, makes a huge difference. Before investing, many people choose to maximize workplace pension or retirement contributions, especially when employers offer matching benefits. It's essentially free money, a guaranteed return you can't beat elsewhere. Next, tax-free investment accounts. If your country offers them, these shield gains from capital gains taxes, contributing up to the annual limit. Then consider general investment accounts for amounts beyond that. Always be aware of local tax rules. Property can be a good investment, but the stock market has a lower barrier to entry. You can start with small amounts. Property involves maintenance costs, taxes, and responsibilities. Stocks and funds are simpler and more passive. As a beginner, keep investments simple. Broad, globally diversified funds are a smart choice. Low-cost index funds spread your risk across hundreds or thousands of companies and regions. Fees matter. Even small differences affect long-term return. By now, let's talk about common mistakes new investors make. First, procrastination due to fear. Waiting for the perfect moment can cost you years of growth. Invest 10,000 at 25. Could grow to over 100,000 by 60. Wait until 35. You'd have only 68,000. The difference is the cost of delaying. Second, following short-term trends. Excitement leads people to chase hot stocks or crypto. Early confidence can be misleading. Focus on consistent, long-term strategies. Small fund allocations are fine, but don't risk sleep over them. Third, panicking during losses, selling when markets drop locks in losses. Experienced investors stay calm. Focus on long-term goals. Strong emergency funds and cash buffers protect you from emotional reactions. Main takeaways for success. Build your financial house on solid foundation. Secure your emergency fund and short-term savings first. Clear expensive debts. Paying them off often beats potential investment gains. Prioritize tax-efficient accounts and workplace pensions. Tax savings accelerate growth. Automate investments. Relax and step away from daily market noise. Let your money do the heavy lifting. Start now. Once your first 10,000 is invested and automated, the rest becomes much simpler. Thank you so much for watching this video till the end. I really hope you found it helpful and learned something valuable that can make a difference in your life and career. If you enjoyed this video, don't forget to hit the like button, subscribe to the channel, and turn on the notification bell so you never miss any future videos like this. I share powerful lessons, practical tips, and real-life strategies to help you grow personally and professionally. So stay connected, keep learning, and keep moving forward. See you in the next video, and remember, every small step you take today brings you closer to your bigger goals tomorrow.